This is InvestTalk. Independent thinking, shared success.
Hey guys, I've got a question for you on ticker symbol XRP. Just curious what you think is going forward looking like. I appreciate it. Thanks.
I believe he's asking about Ripple, XRP, and that is a crypto ticker symbol. We don't really deal too much in crypto. I follow it. We follow it in relation to companies that help facilitate trading and of these assets, and in that sense, we follow it. I know that Ripple had a big jump, and now it's kind of fallen back with the rest of the crypto space over the past month or so. This peaked out, XRP peaked out around 330, and now we're down to about $2.53. So it's down pretty decently over the past few weeks or so. Now, if I pop over to Bitcoin, Bitcoin's also bouncing around pretty dramatically. And I'll say this just in general about crypto in general. It's really highly correlated to liquidity. So go look at what happened to Bitcoin back in 2022. The NASDAQ was down dramatically. Crypto, or let's go Bitcoin, peaked out at 65,000. And what did the NASDAQ do? Peaked out and fell 33% throughout the year of 2022. And Bitcoin bottomed in late 2022 at about 15,000. Okay, so going from 65,000? 58,000, excuse me. Yeah, 65,000. Yeah, all the way down to 15,000. So that's how crypto works. It can easily double, triple, quadruple in a relatively short period of time, but it can also go down 70, 80% in a very short period of time. And odds are good that as you go through this year, liquidity becomes more scarce, and you get probably a turn in crypto to the downside. Think what are the catalysts here? You had two big catalysts over the past year. One is the adoption of ETFs, and the other is the Trump administration taking office. And both are friendly to the crypto industry. What is that next catalyst? I don't really see that on the horizon, and to bring more money flow in. And then when liquidity across markets tend to dry up, which once again, I expect that to be more of the case as we get deeper into the year and into next year, it will first happen in the crypto space. And I'm watching really for that 90,000 mark on Bitcoin to break. If that does break, there'll be a broader signal that liquidity is getting more scarce. So far, it hasn't. It's just kind of hanging around this 100,000 mark, bouncing between about 92 and 105. And we're at 98 now on Bitcoin. So I don't have a particular take on Ripple itself, but that's my broader take on crypto. Now, I hope you've been telling your friends that our audio podcast is available in video form over on our YouTube channel, and we get questions submitted over there. And this one says, what do you think of Dell's current price? Is it a good chance to pick it up? Now, let's take a look at Dell. I don't think I need to tell everyone else what Dell does. They went private a while ago. They went and then they went public. What was that? Back in 2019. So they were private for many years. And it's been a good IPO. It IPO'd around $22, and it rallied to an all-time high last summer to about $180 per share. But now we're down to 101. So strong pullback from 180 to 101, certainly in a downtrend. And the real catalyst here is the fact that earnings growth has slowed. In fact, 2024 earnings were down 6%, $7.13. This year's supposed to bounce up to 783, then next year to 941. But once again, the worry here is that that slowdown in growth, and obviously the market isn't really buying those estimates, I don't think. Otherwise, I think you get a stronger bounce back. Now, I do like Dell as a business. Return on invested capital around 18%. Free cash flow about $2.8 billion. Let me take a look here what that looks like over the long term. If my computer wants to work or my internet wants to move fast. There we go. See, it's in a downtrend. Free cash flow was at $12 billion trailing 12 months as of the second quarter of 2021. Now it's at $2.8 billion. So in a strong downtrend there. And then you have a decent amount of debt on the balance sheet. You're talking about $19 billion in net debt. That worries me just a bit. Enterprise value to EBITDA around 15.9. And that's not high, but it's also not super cheap either. Okay. So frankly, I would be patient on this name. I think there's potentially more downside to come. The technicals are fine. I like that it's on your watch list. Certainly a good company to be looking at. Let me give you a price here. I want to give you a support level. I already hit that. So I'm going to go it's about $75 per share. Now it's at 101. At 75, I would pick up Dell because I do think long term it's a very profitable company and a good business overall. Let's go ahead and roll in another fresh listener question from 888-99 chart.
Hi, Justin and Luke. Can you please take a look at Nucor Corporation? That's NUE. Thank you very much. Bye.
All right, looking at Nucor, and this is a steel producer, manufactures steel and steel products for automotive, construction, machinery, and appliance markets. And you hit on the head here with this. There's two big steel companies in the United States that have history of being very profitable. I won't tell you the other one, but this is one of them. And their business boomed during the pandemic. Went from $3.31 in 2019 all the way up to $29.50 in 2022. But that has taken a step back. This year, earnings are only expected to be $7.34. So you can see how wild of a ride it is on the earnings front when you're investing in steel producers, even the best run steel producers. Because at the end of the day, nobody cares too much about where their steel comes from. Do you care about where the steel in your car comes from? Which company? No, not really. So it's really about it's up to the car maker to pick the best quality steel at the right price, etc. And it comes to operational efficiency. But even if your operations are super efficient and you're well run, you're still at the whims kind of the market and demand. And Nucor had free cash flow in 2022 of $8.3 billion. That's now to $800 million. So down 90% from its high. And that's why the stock is in a downtrend and it's been rolling over. Let's take a look at when it peaked out. It peaked out last spring, around $200 per share, now $130. It's in a downtrend. Even though it bounced, its recent low is around 112 and then it bounced to 130 right now. But once again, it's in a downtrend. So I just don't love to invest in steel companies, to be honest with you, because of the cyclicality of it. Now, this is one of the better ones, but not a name I would touch at the current time. Thanks for the call.
Stay informed with exclusive insights by subscribing to the KPP Premium newsletter today.
We've got time to fit in a listener question from our InvestTalk YouTube channel. And Iraq Don says, hello, just curious what you think about Noble Energy NE. It seems very low debt levels and its return on assets and return on equity are decent at 7 and 11 respectively. Let me pull that up here so I can confirm his numbers. I understand the drill baby drill is largely hyperbole, but will drilling companies stand to do well in the new environment? I was thinking about picking some up if it dips to 25 or so. Well, it's at 32 now, and it's an offshore drilling contractor for the oil and gas industry, and that provides contract drilling for international oil and gas companies. But this is offshore, okay? And I don't think that's really where the focus is going to be with when it comes to drill baby drill, right? Thinking more federal lands. And this is a stock that's really been in a downtrend. Okay, you look at Nucor, Noble. It's a Swiss company and about $5 billion market cap. Earnings this year, $1.84 for 2023. 2024 estimates $2.86 and then $2.79 for this year, excuse me. Earnings estimates continue to come down, however, and that's the issue. So earnings all look to be shrinking, and that's why the stock is down from $55 all the way down to $32. Now, what I am seeing here, let me pull up a chart. I am seeing actually some strength in the MACDs above the zero line. It's consolidating right below the 100-day moving average. I like the balance sheet here. Pretty decent debt level, return on equity around 12%, return on invested capital around 10%, free cash flow at $230 million on a $6 billion enterprise value. That's not amazing. You're talking about 2.5% or so. Nothing too exciting, to be honest with you. But I do like the fact that free cash flow is headed higher. So, in the oil space, if you're talking about good risk versus reward, good valuations, good balance sheet, I don't dislike this one. I like the trends in the free cash flow. I like the balance sheet. Most of all, I kind of like the chart. I'd like a little more traction. I'd like to see this move above the 100-day moving average, but it's consolidating right below it. And that typically means it's gaining power to move higher. So I'm going to give Noble a modest thumbs up. Now let's touch a bit on 24-hour trading. I don't know if you know this. There's after-hour trading. Markets typically close for equities at 4 p.m. Eastern. That means here on the West Coast, market opens at 6:30 a.m., closes at 1 p.m. Pacific, which from a lifestyle point of view, I'm usually an early riser. It's pretty nice. You get a lot more. I get a lot done afternoon, emails, catch up on things, obviously doing this show. So I like it. But many are talking about having trading 24 hours. And you're getting more and more interest, especially from the average investor who has a Robinhood app and wants to trade after hours from their phone. And you can do that on Robinhood. I think there's a fee, though, to do it, whereas normal trading and normal business hours, there isn't. But it might be worth it if you can get in early before a big move. So overnight sessions are from 8 p.m. to 4 a.m. New York time. And you often see domestic traders trading with Asian investors, and you're getting, buy and sell orders. Now, the NYSE, the largest stock exchange in the world, is one of number of groups that are looking to offer longer trading windows. Now, one is called 24X or 24 Exchange. And this is it was approved in November, tentatively. And it's backed by hedge fund billionaire Stephen Cohen. I believe he's the one that owns the Mets, if I remember correctly. And the plan is to trade nearly all day, like not all day long, but 23 hours a day. So it's closed for 1 hour to reconcile trades. And that's really the big issue here is, can you trade 24 hours a day, trillions of dollars every single day, and deal with all of the regulatory challenges that come with that? Settlements, transferring money, settling shares, etc. Right now we're T+1. If we want to sell something, the money's not available till the next day. But if you're trading 24 hours, when does it really stop? When's the close? If there isn't really a close, right? If you talk about mutual funds, ETFs, when is the close of the day for those positions? That's a question that needs to have clarification. And you need to have institutional buy-in, right? Because they're the ones that are really making the trades. I know you think retail investors are moving prices. They can, but most of all, it's the institutional investors that are moving prices. And then you have things like circuit breakers that operate during normal business hours. Can they operate after hours or in some 24-hour type of trading environment? That's a big question. And then what about big moves in stocks? You could see margin calls while you're sleeping because the market's open. One nice thing about having set trading hours is when trades can be placed. When problems could arise. And outside of that, hey, market's closed. There might be a news headline. I can't do anything about it until the market opens. And sometimes that's a good thing, right? Allowing the market to gather more information, not panic one way or the other. And I think when the market opens, it becomes more efficient. That's why a lot of times governments, companies do earnings after hours, because they don't want those trades to be panicky. And now the other argument is, well, there's less liquidity after hours. You're already getting after hour trading. You might as well make that market more liquid. And that's what I could see happening, is expanding the trading hours to longer, but not quite 24 hours. Right now we have pre-trading and post-trading. Like I said, it's pre-trading is from 4 a.m. Eastern until the market opens at 9:30. And then you have post-trading, which is 4 p.m. Eastern to 8 p.m. Eastern, so the 4 hours after the market closes. And then there's overnight. So could you expand those trading hours? I think that is probably something that could happen due to technology and the speed of the way things are done. But it's and that's probably maybe at some point going to 24 hours, but that's probably the next step, not going from where we are now to just this 24-hour trading period. Even 23 hours seems a bit extreme as well. Remember, there's settlements, and you have to re-register the equity under the new owner's name when it trades. And in fact, I don't know if you know this, in 2023, Robinhood took a $57 million hit when its systems failed to register the transfer of a company's shares. And so, when are they going to test these systems? When's maintenance going to happen, et cetera? And it's an interesting thought. And especially because of crypto being trading 24 hours a day, currencies being traded 24 hours a day, it's interesting, but it's probably not going to be here anytime soon.
Hi, Justine or Luke. This is Sid from Charlotte, North Carolina. I have a question about Gentex, ticker symbol G as in George, N as in Nancy, T as in Tom, X, GNTX. I hold a very small position. I would like to know your opinion about the long term. I'll hear you in the next podcast. Thank you so much. Have a great day. Bye-bye.
All right. Well, thank you for your call. Looking at Gentex, this is about a $6 billion market cap, and they manufacture auto-dimming rear view mirrors, electronic garage door openers for the automotive industry. So think of your rear view mirror, has the garage door buttons on it. It's a very common thing in most cars these days, even the low-end cars. And this is a consistent business, but in some ways volatile as well. Last year, earnings fell 4%. So it's to bounce back up 11% this year, but those estimates are coming down as well as for next year's earnings. And this has been kind of chopping sideways for a while. So what you're probably looking at is, they might make $2 a share this year, $25 stock. You're talking about, a low teens multiple, call it 12 times earnings. And that sounds cheap, but when you have no growth, that's not great. Now, the good thing here is they don't have a stretched balance sheet. They have net cash in their balance sheet. Free cash flow is about $348 billion, but it's rolling back over from a recent high of $400 billion, an all-time high back in 2021 of $472 billion. So free cash flow is certainly on a downtrend, and I don't like that. And the stock is in a downtrend as well. This peaked back in February or March of last year, around $37 per share. Now we're down to 25 and change. And recent earnings report came out and it fell once again. We're going to squeeze in one more question. And this one came from our YouTube channel. It says, are you guys adding to your FSM position? FSM. And this is Fortuna Silver. Okay, for Fortuna Mining. And they're a silver miner. Okay. And the chart is now in an uptrend. Silver is breaking out, and we continue to be a fan of Fortuna Silver. Earnings for this year are supposed to be 55 cents. That's up from 23 cents last year and 16 cents the year before. And it's a $5 stock, $5.21. So you're talking about a 9 times forward-looking earnings And actually, if you go till next year, earnings supposed to be 80 cents a share. So you go by some forward-looking earnings, it's actually closer to a 6 multiple. So to us, it's very cheap, and we love of all the silver miners, this is really our favorite pure play silver miner. They do have some mines around the world, so there is some risk there, but it's a small name, only about $1.6 billion market cap, but next to no debt on its balance sheet, free cash flow, $126 million. That is set to rise on a $1.6 billion market cap. So you're headed towards a 10% free cash flow yield, which we really like. No dividend, but the chart is good, and we would continue to own Fortuna Silver.
Thank you for tuning in.
If you enjoyed this content, please give us a thumbs up and subscribe for more updates.
Hello, InvestTalk. I'm calling today about ticker symbol RVMD, Revolutions Medicines, and the reason I'm calling is because there's different news. Basically, the news say that the ticker is trading at a 49% discount. It had a run till something in 60s, and now it's hovering on the 40s. And I look at the income and other metrics, I see no sales. So the reason they have so much money is because of share offerings. And this is what I suspect. Could you please look into the numbers and tell me if this is really a bargain or it's trying to be pumped from different sources on the internet? I'm looking to short. Thank you.
Oh, that's an interesting little tidbit at the end. Are you looking to short? Yeah, it is probably being pumped from many sources on the internet. This is a relatively recent IPO. RVMD is the symbol it IPO'd back in, 2020? At around $28 per share when it started trading, went all the way up to 60 recently, 61 or so, and now it's down to 42 and change. And you're right, the number of shares outstanding continued to go up from, in 2020, get this, 57 million shares when it went IPO. Now it's 168 million. So yeah, it's really all about hype. And what do? Well, this is a biotech name, and the goal is to cure cancer, right? It's develops novel therapies to inhibit elusive frontier targets and oncology drugs. And so that's what it's trying to create: a negative free cash flow of $550 million. Now, I don't know anything about the products. Maybe they're great. Maybe the hype is real. History says it's not, right? How often have we cured cancer? We haven't. Hint there. So, it's not something that you want to be invested in. But like you said at the end, do you want to short it? Well, this reversal can be a spark to a broader sell-off. The last time this had a broad sell-off was, that was in early 2021 when it peaked around $54 per share, broke its uptrend in early 2021 in about April timeframe. And then it had a long march down all the way to the mid-teens, around $15 per share, before it started its uptrend when the market bottomed, liquidity got easier. And, is this the type of canary in the coal mine that I talked about? When liquidity starts to dry up, these names that don't make money, and that's what this is a company, it's a biotech name, standard biotech name, doesn't make money. And ultimately, it's 99.9% of these biotech names are the original Ponzi stocks, I call them. We've had a lot of these Ponzi stocks from the SPACs back in 2020 and 2021 to a lot of other types of tech names that are typing AI and the latest buzzword that is popular in the investment world in order to raise capital, bring in retail investors, and ultimately pull the rug on them when the hopes and dreams and the hype fades because they don't hit their targets and their goals that they've promised to investors. And then investors pull their money out, the stock tanks, and then investors move their money out to something else. And that is the history. That is the cycle for biotech names. So is this any different? Probably not. And so if you're looking to short something, these are the type of names you want to short, right? Negative free cash flow, likely going to have to do another capital raise, dilute shareholders. The worry is that there will be some sort of short squeeze. And that's what you have to worry about. The short interest right now is 10 days. So on that's about 16 million shares. It's about 10% of the float. It's a good amount, but it's not dramatic, to be honest with you. So I think it's a good short. Now, could it bounce a little bit more from here like it has over the past a week or two? Sure. But I love these type of names to short. So I'm going to give a short on Revolution Medicines, RVMD, a thumbs up. Well, that about does it. Completes our latest edition of InvestTalk. We appreciate you tuning in. And we encourage you to tell your friends and family about our free podcast downloads, which you can find anytime at iTunes, Spotify, Google Play. Be sure to rate and review on iTunes as well. And I hope you've heard the InvestTalk podcast is available in video form over on our YouTube channel, so you can check out all the charts and data that I talked about today by heading over there and seeing what we are basing our answers on. Now, you need help better understanding your risk tolerance level, your broader financial goals, your strategy of your portfolio, if that fits with the current market times. I encourage you to head over to investtalk.com and schedule a portfolio review with me. Independent thinking, shared success. Thanks for tuning in. Good night.